consumers. Our Steve Kovac joins us this morning with the latest from the trip and some of the stunning data going back a few years looking at China sales, Steve.
Yeah, it doesn't look too good, Carl. And look, this trip that Tim Cook is having in China, this is all ahead of the anticipated Apple Intelligence launch in that country. Also, late last night, Apple held a virtual session for Chinese developers where they walked them through Apple Intelligence tools so they can make their apps with it, but still no indication when Chinese users are going to get Apple Intelligence. We're expecting that in April or May, though. Trip comes at a pivotal time for Apple. China's sales were down 11% in the December quarter that just passed, and the business has been struggling to grow there since Huawei started selling phones again in China a couple years ago. Let me put this in perspective for you guys. Apple did almost $24 billion in sales in China in that December quarter of 2022. 2 years later, it was $18.5 billion for that same period. Now, Apple also whiffed on its big AI upgrade to Siri. That was supposed to launch this spring. It's delayed at least until next year, and it's going to make Apple Intelligence a much tougher sell to Chinese customers because they're only going to get some minor features so far. There are a couple bright spots going on in China, though it's not all bad news for Apple. There are these government subsidies for smartphones that could give Apple's business a boost this quarter. Cook hinted as much last earnings call that he expects the government stimulus to help move more iPhones this March quarter. Also, they found a local AI partner to launch Apple Intelligence. That would be Alibaba. In the meantime, Cook's saying all the right things he needs to say on this trip, really playing the diplomat over there. While in China, he praised DeepSeek's AI model and announced some investments in clean energy and rural education. All of this, though, with the backdrop of the looming trade war between U.S. and China. And as you guys have been saying all morning, it could be getting worse next week, David.
Yeah, Steve, thank you. Steve Kovac. Setting up a lot of topics for our next conversation. And our guest right now is D.A. Davidson's analyst Gil Luria. This is a buy on Apple shares. $290 is the price target. Gil, you heard Steve, I'm sure. Let's start off with Apple Intelligence. I mean, where are we on this? Has it been a fatal misstep? Is it one that they can easily come back from? How do you sort of view it right now?
It's been rolling out slower than we anticipated, slower than they wanted. If we're to go back to Worldwide Developer Conference in June, we all got excited about the features coming out. We thought the upgrade cycle would happen for iPhone 16. As we rolled out these features, slower than anticipated, no new Siri, slower anticipated rollout geographically. It's not going to turn out to be an iPhone 16 upgrade cycle. However, some of the features they're rolling out are good. Email summary, notifications are a little more intelligent. The photo editing's a little better. So they're behind, but it's Apple. We're going to keep buying iPhones so they have a chance to correct course, get it right, and eventually there will be an iPhone upgrade cycle.
When?
Over the next couple of years. It's already starting to contribute in the geographies where they've rolled it out. It is already a contributor. As they roll out more features, as they get new Siri out, it'll spread through word of mouth and drive an upgrade cycle over the next couple of years. Not the super cycle that was priced in when the stock was $250, but an appropriate upgrade cycle given that iPhone was flat over the last couple of years.
Tim Cook is in China right now, as Steve said. And, you know, in the 9 o'clock hour of our show, Carl, Jim, and I were talking about the fine line he has to sort of tread between an important market for him. It may be down, but it's still important for Apple, being China, and obviously pleasing the Trump administration. Do you think he can pull it off? And are you going to be concerned on April 2nd if there's no exemptions, for example, on the import of iPhones from China?
Boy, it is a high wire act for Mr. Cook, because he has to make these two big egos happy and content and stay out of the tariff battle here. It's going to be very hard to do. Eventually, this is going to have some sort of impact on them. They're making commitments for investment in the U.S. They're making commitments for investment in China. They're actively negotiating. But eventually, this is going to have to impact the iPhones if we have full tariffs. It's hard to imagine Apple's going to get a complete out. Not to mention the fact that on a global basis, Apple is also subject to non-tariff barriers. The Europeans are making life harder and harder on Apple. And it wouldn't be surprising if China was to use other types of levers against Apple as well.
Although it sounds like she is meeting with U.S. companies and reassuring them, so that might be some good news on that front. I was going to ask you about other potential tariff or reciprocal tariff or non-tariff risk on Apple in particular. There's Europe. There's also India, right?
Yes, and India is such a key market because, as you've been pointing out, China at most contributes volatility to Apple. It's been, as Steve Kovacs has pointed out, Apple used to get more than 20% of their revenue from China. Now it's less than 15. They need a big growing economy like India to fill the gap there. And again, it's going to be a matter of making the investments in India and managing that relationship and navigating the tariff situation with India for Apple to continue to have that long ramp in this very critical market.
Gil, thank you.
Thank you.
Gil Luria.
As we had to break, check out shares of DJT. We haven't checked this in a while. The Trump media company owns Truth Social. It's rallying after the company announced a new agreement with Crypto.com to launch a series of ETFs and related products. The stock is down 30% year to date, but having a nice bounce back today, up more than 7%. Trump is the president is the majority owner here. It's a small revenue company, it loses money, but clearly getting into crypto, I think, blurs the lines a little bit now with some of the administration policies, priorities, and business opportunities here. Having a good day, up 7.5%. We'll be right back.
Energy off to a strong start this year, the top-performing S&P sector, in fact, thus far. Investors, though, are clearly favoring one group in the space. Pippa Stevens is going to answer which group that is, I'm guessing right now. Pippa.
Hey, David. Well, if you look under the hood, we are seeing a growing divergence between the gas-weighted names versus the oil-weighted names, with a clear preference for the former. This comes as oil has declined 15% in the last year, while nat gas has more than doubled. Oil names like APA, Oxy, and Diamondback are all in the red for the year, while gas-focused EQT, Antero, and Range Resources are all up double digits. We're also seeing this preference reflected in valuations, with names like Cheniere, Expand Energy, and CNX fetching higher multiples than oil names. That's not something that we usually see. Now, the divergence comes as nat gas benefits from three key tailwinds: coal to gas switching, rising LNG capacity, and increases in power demand thanks to data centers and electrification. Oil, on the other hand, has been stuck in a rut for months, and with ample spare capacity worldwide, it's really hard to see the narrative shifting meaningfully. Or as Evercore ISI put it, gas and power have emerged as one of the most durable investment themes, likely continuing through 2025. Carl?
Fascinating, Pippa. Thank you. Pippa Stevens this morning. Coming up after the break, CEA Chairman Stephen Myron will join us to talk about the president's latest tariff tactics and their potential impact to the economy when we're back in 3 minutes.
Save $500. Welcome back. I'm Silvana Hanal with your CNBC News update. The U.S. is meeting today with Ukraine again as negotiators shuttle between Kyiv and Moscow for ceasefire talks in the Saudi capital. The 3 days of meetings come as the U.S. tries to broker a deal between the two sides that would begin a partial pause in the 3-year war. President Trump's nominee to run the Social Security Administration, Frank Bisignano, is facing a grilling right now from the Senate Finance Committee. Senators are expected to ask whether he supports privatizing the agency. The hearing also comes after the acting head made headlines for threatening to shut down the agency after a judge blocked the Department of Governmental Efficiency from accessing personal data. And a Swiss court cleared former FIFA president Sepp Blatter and France soccer great Michel Platini of corruption charges today. The charges centered on accusations that a more than $2 million payment Blatter authorized for Platini in 2011 was fraudulent. It was a consultancy fee paid to Platini nearly a decade after he completed the work for FIFA. Sarah, I'll send it back to you.
Senate should just tune into our show because he's answered all the questions, Frank Bisignano, on the show in recent weeks. Thank you very much. Appreciate it. Markets are trading modestly higher. Stocks are a little bit higher after consumer confidence did come in lower than expected. Saw the weakest level there since January 2021, all as investors remain hopeful that the U.S. will narrow the scope of tariffs. Let's bring in Council of Economic Advisors Chair Stephen Myron. Stephen, it's great to have you. Thank you for joining us today.
Thank you so much for having me. It's great to see you.
So we see another weak consumer confidence number, just further evidence of this deterioration in the soft survey confidence data. I know you're a tariff guy, but do you think that they're having an impact?
Well, look, today's consumer confidence data are what they are. I would point out that folks often let their political views influence their views of the economy, which tends to manifest in the confidence data. And there's been a breakdown in the correlation between consumer confidence data and any real economic outcome in recent years. The correlation hasn't been super strong. And I think that's part of why you see the market not really responding very much to today's consumer confidence data. Instead, there's been a whole host of other data which have been actually quite positive for the economy, whether you're thinking of the retail sales data, job creation, total lack of meaningful numbers of layoffs. The S&P PMI, services PMI yesterday came out fantastically. New home sales was good. Housing starts is good. There's a whole bunch of data for the economy that are pretty decent and pretty darn good. And so I think that's part of why you see the market shrugging off today's confidence print.
Yeah, I mean, retail sales were okay, but you're right. The jobs number hasn't really seen any weakness. I think the concern is as confidence gets hit, at a time where consumers are increasingly stretched and tariffs go through, which could result in, even if they're one-time price increases, it's going to make a deterioration in the economy. The soft landing that the Fed worked so hard to preserve is really in jeopardy now. You don't buy that?
No, I just don't think that there's been a very strong correlation between the confidence data and actual consumer spending in recent years. And if you go out in the street, people are going about their lives. They're getting their paychecks, they're spending their paychecks. The economy is marching on ahead. And as far as tariffs go, I think my view is that the country on which we're imposing the tariffs ultimately pays for those tariffs, as opposed to having any material negative economic consequences in the United States. And I'm happy to get into that subject if it's something you'd like to talk about.
Sure. I mean, just because we hear and we monitor conference calls of companies like a Walmart who says that, they import a lot of stuff from overseas, they're going to pass it on to the consumer.
Yeah, so look, in economics, there's a theory called tax incidence, right? Which basically argues that whenever you look at any economic policy, the party that's more inflexible ultimately bears the costs or the benefits of whatever policy is being implemented. And when you think about American consumers, we have plenty of options for where we can get imported consumer goods from. We can make them at home. We can substitute into home production. We get them from a variety of countries, in which, depending on what tariff rate we apply to them. And so firms like Walmart, have many options for where they can source their consumer products. And you see that when they go to their suppliers in China and they say, look, you're going to have to eat the tariffs. And part of the reason why they have the ability to do that is because the factories in China are designed explicitly for the U.S. consumer market. Those are installed factories. They've already been put in place. They've already trained their staff. All those factories are aimed directly at our market. There is no good substitute for them. That gives us all the leverage and is why that other countries will ultimately eat the cost of the tariffs.
I don't disagree. And at the top of the show, I showed a chart showing that there are lots of ways to mitigate tariffs. They can redirect trade. They can diversify supply chains. Like, to your point, the other countries will feel it worse. But the stock market is telling you that it definitely is going to be disruptive for corporate earnings, for margins, potentially for demand. Not all of it can be rerouted. So ultimately, how do you think about, given April 2nd is coming and we don't know exactly how widespread that's going to be, the impact economically?
Yeah, so April 2nd is not that far away, and Liberation Day with tariffs is around the corner, and everyone will find out what those are soon enough. But look, you mentioned the stock market. I think that there's a lot of things that are driving the stock market, and I think that there's a lot of focus on tariffs, but really there's a whole host of other policies that are being enacted as well. And something my colleagues have talked about a fair amount, and I want to emphasize also, is that we are transitioning the economy away from being a primarily government-driven economy and towards one that's driven primarily by the private sector. And so what I mean by this is if you look at the share of jobs that were created in 2023 and 2024, so the second half of the Biden administration, after COVID is done in the rearview mirror, 73% of all jobs that were created in those years were created by government or government-adjacent sectors. And by government-adjacent, I mean sectors like education, like healthcare, like social assistance. These are sectors of the economy that derive a very, very substantial, if not most, of their financing from taxpayers in one form or another. So almost 3/4 of job creation was due to these sectors, and that's a problem, right? And reorienting the economy from government-driven sectors to the private sector, which is more efficient at creating long-run prosperity, and the only path to long-run prosperity, look, that may have some bumps. And I think that the stock market is seeing that in part. There's lots of other uncertainty into the economy. We're waiting on Congress doing its job to extend the president's tax cuts from 2017 and ideally cut taxes even further, which will also do their part in ushering in the president's new golden age.
Chair Myron, speaking of tariffs and taxes, one comment in the White House briefing room a couple of weeks ago that got some notice was when Carolyn Levitt said tariffs are a tax cut for the American people. Is that the official White House view?
Look, only the president gives the official White House view, but what I would say is that, tariffs raise revenue, and that revenue is ultimately financed by the country that we're tariffing. And if you use that revenue to preserve low tax rates on Americans that we achieved in the 2017 Tax Cuts and Jobs Act in the president's first term, if you use that revenue to cut tax rates even further, then in that sense they can be a tax cut for Americans, because you use the revenue raised by tariffs on foreigners in order to pay for lower taxes on Americans. And I think that's a fantastic policy. It improves American competitiveness. It improves American industry. It improves the American economy. Households and firms and small businesses and workers and families get to keep more of the money they earn every day.
Chairman, you mentioned bumps when you were discussing that transition from sort of government-funded jobs, for lack of a better term, to more funded by private enterprise. How do you see that bump? I mean, how do you describe it? Is it something that goes on for a period of years? It's a fairly large transition you're talking about.
Yeah, I don't think I think years is a bit too long, but I think that on the scope of weeks or a couple of months that we've had so far is a bit too short. And in particular, I think that we have to wait until we get a chance to implement all the policies that we want to implement, right? And so there is a lot of talk of tariffs, right? April 2nd is around the corner. The deregulation agenda is underway already, but there's been a monumentally fast success in implementing the deregulatory agenda, but there's so much work to do still because the Code of Federal Regulations is just so long. And you can only chip away at it so quickly, right? So there's a lot of work to do over the course of the year on that. And then finally, there's the tax cuts that I mentioned before, preserving low tax rates on American workers and firms, and ideally lowering them even further from here in some sense.
Yeah, I mean, you say tax cuts, but a lot of people simply see them as an extension of existing cuts. Do you really believe there will be actual cuts? Or are we simply going to maintain what's already been in place and therefore not necessarily be an aid, so to speak, in terms of the economy?
Yeah, so maintaining what's already in place is absolutely critical to prevent the biggest tax hike in American history on American families. It would be a monumental disaster if that were allowed to happen. But the president's been pretty clear about certain other areas where he wants to cut taxes and where he's exploring it. And Congress is doing it. Congress is doing its work, and I can't really get ahead of that. But I think that the president has signaled his clear desire to provide further tax relief to American workers and families.
I've been very excited to speak with you, Chair Myron, about the Mar-a-Lago Accord. Your paper that you wrote got so much attention on this idea that in order to rebalance the global trading system, yes, we'd need tariffs, but also a weaker dollar, because that is something potentially very market moving. And I think people are buzzing about it again since you got the job as CEA chair. So is there any real discussion happening about any kind of global agreement, a la Bretton Woods, as you described in your paper, to get together and weaken the dollar? Is that something the Trump administration would want to see?
Yeah, so let me be clear. I wrote that essay in November as sort of a catalog of options and not pushing any particular option. Something along the lines of what you described is certainly an option that should be in the catalog. But the president is the one who decides what we do, and he's been very clear that he's focused on fair and reciprocal tariffs. And as we said a few moments ago, April 2nd is around the corner, and on Liberation Day, we'll see those policies put into practice. Could some sort of currency agreement take place over the next 4 years? Sure, it's possible, and if anyone can achieve it, if anyone can negotiate that type of monumental restructuring of the global economy, it would be President Trump. But he's been very clear that right now he's focused on fair and reciprocal tariffs, and that is what the administration is focusing on, and not on sort of one item in a catalog of many items on something that I wrote in November.
No, but the administration's also been clear, and the Treasury Secretary in particular, that they'd like to see lower bond yields, lower interest rates in the market. A weaker dollar too?
Look, I think that you have to talk to the Treasury Secretary if you want views on dollar policy. And I think that we all want lower yields because that's great for the economy, but we want to get there in a way that's healthy and sustainable. As far as the dollar goes, you'd have to talk to them. And like I said before, we're focused on tariffs right now, and that is the tool of the moment.
Clearly, it is. Thank you, Chair Stephen Myron,
Okay, thank you.
Council of Economic Advisors from the White House, reacting to the consumer confidence data. And look, we highlighted this on the show yesterday, David. The soft data is worse than the hard data, the survey data. So watch what they do, not what they say. And that's sort of the White House line right now, because there's been a deterioration in confidence, but not as much in spending, certainly not in the jobs market. People are still getting their paychecks and they are still using it. As far as tariffs go, we'll see if that proves to be the case, that companies can go elsewhere. I don't know. Can Apple go elsewhere for iPhones? Can Nike go elsewhere for sneakers? Yes, they go to Vietnam, but maybe we'll see reciprocal tariffs there as well. So that, I think, is a big question mark. But it certainly is a defense for how companies can deal in the U.S. and they get punished worse elsewhere. That's his main point.
Yeah, a lot depends on various workforces and infrastructure in countries all around the world, as we've talked about for years. Meantime, stocks managing to undo some of the early declines and regain some ground. Now Dow's up 73, S&P now just about 12 points away from 5,800. We're back in 3.
China this week as the iPhone maker struggles to boost sales and tries to bring its AI features to Chinese consumers. We'll talk to one strategist who says it's the perfect time to take a bearish view on the stock. Tune in to our Market Navigator segment today on Power Lunch.
Senate Intel today holding a hearing this hour focusing on worldwide threats. And that's a day after a journalist was included in this encrypted group chat discussing some military operations. Our Eamon Javers has been monitoring this for the past 24 hours. Morning, Eamon.
Yeah, good morning, Carl. It's a day after that bombshell report in the Atlantic magazine that senior Trump intelligence figures accidentally CC'd a reporter to a text chain while planning a military strike. Senior Trump intelligence officials are testifying live right now before the Senate Intelligence Committee for the regularly scheduled worldwide threats hearing. Director of National Intelligence Tulsi Gabbard and CIA Director John Ratcliffe, who were both on that text chain, are testifying now. And just a few moments ago, committee vice chair, the Democrat, Senator Mark Warner, expressed outrage over the security lapse.
There's plenty of declassified information that shows that our adversaries, China and Russia, are trying to break in to encrypted systems like Signal. I can just say this: if this was the case of a military officer or an intelligence officer and they had this kind of behavior, they would be fired.
And for his part, President Trump is indicating today that no one yet is at risk of losing their jobs due to the scandal. Speaking by phone to NBC News' Garrett Haake, Trump said he still has confidence in his national security advisor, Michael Waltz, who is the official who mistakenly added the reporter to the text chain. The president saying Michael Waltz has learned a lesson and he's a good man. Now, for business leaders, guys, all this raises a question about how leaders can monitor how their top officials are handling sensitive information and what role Signal should play in high-level communications. Back over to you guys.
Meantime, Eamon, I see Representative Bacon's on the tape here saying that he's almost positive that Russia and China were also monitoring those two phones. And then we have some comments from the Brits today asking them whether or not they're still confident in sharing intel with the U.S. after yesterday.
Yeah, I mean, if you look at the cell phones that are in question here, I mean, these phones that are being held by the vice president, the secretary of defense, the chairman of the director of national intelligence, the CIA director, these are among the most targeted individual cell phones on planet Earth by foreign intelligence services. You can imagine a whole host of intel services are trying to get into those phones. So the risk for handling any kind of war planning on those phones is enormous, even if it's on an encrypted app like Signal. Remember, Signal will encrypt the message between the two phones, but if somebody is in the phone, it doesn't matter whether the message is encrypted in transit or not. So the risk here was enormous.
Eamon, is there any indication that this was unique to the Trump administration? Did Biden administration officials use Signal? Is that what the mistake was here, or was it just a mistake that the journalist got added?
Well, the mistake was a couple things. One, uploading war plans. According to the journalist, the war plans for the attack on the Houthis in Yemen were uploaded to this group chat, including specific targets, names of individuals they were trying to kill, weapon systems that would be used, timing of strikes, sequencing of strikes. All that information was transmitted to this encrypted app. And then the question is, who accidentally CC'd a reporter to that? And why did nobody else say, A, we shouldn't be communicating this information on this app, and B, oh, who's this other person whose identity I don't recognize on this group chain? None of that appears to have happened here, Carl.
Eamon, thank you. More from, I'm sure, you later in the day. Eamon Javers. Meantime, stocks trying to add to recent gains as April 2nd's reciprocal tariffs deadline looms. And despite this recent downturn in consumer confidence ratified today at Conference Board, our next guest says there are no signs, though, of a recession here. Mona Mahajan joins us this morning. Edward Jones, senior investment strategist here at Post 9. Mona, it's great to have you back.
Great to be here.
So you think there is maybe some kind of firewall between the survey, soft data, and actual spending trends?
Yeah, a couple things here. One, the survey is backward looking, so maybe occurred during the peak of uncertainty, the heightened tariff, uncertainty and unknowns there. But two, we tend to see in the survey data, even though it's turning downward, consumer behavior in real time may look different. We actually heard that from the Fed just last week, saying they don't yet see any signs of consumers pulling back, despite what they're seeing in sentiment data moving downward. So it could be a disconnect there as well.
Are you folding in any anecdotal corporate commentary from United on air travel or any of the McCormick, consumer staples activity, for example?
Yeah, look, clearly earnings revisions have softened a bit, and we are seeing that for Q1 and Q2 of this year. Q3 and Q4 are actually holding in there pretty well. Even with the softening we're seeing, we're still looking at a 10 to 11% earnings growth outlook for 2025. Not bad considering last year was double digits and next year is expected to be double digits as well. So this is an economy that continues to show signs of life.
We were just talking to the White House Council of Economic Advisors chair who made that point on spending, that it's really just confidence data, not necessarily spending, but also played down the impact of tariffs on the stock market. And when I asked him what the market is telling you about economic effects of tariffs, he said, well, there's a lot else going on. We're trying to transition from public sector jobs to private sector jobs, and there are all sorts of other uncertainties out there as well. What's your take on tariffs and how tied it is to market performance?
Yeah, clearly I think tariffs did weigh on market performance. They are an overhang. Look, over time, tariffs will raise prices across a number of goods, and then they can slow economic growth. But history tells us, even the Fed study on the 2018-2019 tariffs showed that that impact wasn't as severe as many thought. So despite the uncertainty, the volatility, the actual data shows that the impact on inflation, 0.1 to 0.3%.
So you're not worried about them?
Not as worried. I'd say peak tariff concern, at least for the near term, probably happened over the last couple of weeks. Since that, we've gotten maybe April 2nd tariffs looking more targeted. We've gotten a Fed that's telling us as well that they don't see economic growth slowing into a downturn. They also see inflation heading back to 2% over time as well. So this is starting to look like markets are starting to price in maybe a less severe outcome, which is nice to see.
Mona, it's good to see you again.
Good to see you guys.
Thanks so
Thank
much.
you.
Well, speaking of the market, we are building on yesterday's gains with the S&P up roughly 1/3 of 1%. The Nasdaq approaching 0.5% gain right now. We've got 6 of the 7 Mag 7 names in the green, including Tesla. Up. I spoke too soon. It's now down 6 cents, but was very close. NVIDIA, the only one of the names that is actually down more than 1%. Everything else, Apple, Meta, Alphabet, Amazon, Microsoft, all up. We've got a lot more market coverage for you straight ahead.
Hello and